In the ever-evolving landscape of cryptocurrency, a seismic shift is on the horizon with the advent of BlackRock's foray into the realm of Bitcoin exchange-traded funds or ETFs. The financial giant's potential entry into the crypto space has sparked fervent debates, leaving investors and enthusiasts alike grappling with a crucial question. Is the BlackRock Bitcoin ETF a game changer set to revolutionize the market, or does it carry the ominous potential of being a bubble maker? Welcome to Financial Literacy. Here, we are dedicated and passionate about bringing you nothing but honest and straightforward facts about your money. We will help you take control of your finances and get you to the next level. Beginners or experienced, this is your one-stop shop for all things financial literacy. In this video, we will explore the pros and cons of a Bitcoin ETF, the likelihood of approval, and its potential impact on the crypto market. So if you're ready, without further ado, let's start the video. Pros. BlackRock's application for a Bitcoin ETF has been making waves in the market, with many speculating about the potential impact on the crypto industry. But what exactly is a Bitcoin ETF, and what are the pros of such an investment vehicle? Access to institutional investors. The approval of an ETF would make Bitcoin more accessible to institutional investors who currently face regulatory hurdles in investing in cryptocurrencies. This could significantly increase demand for Bitcoin and drive up prices. Increased market liquidity. ETFs are traded on traditional stock exchanges, which could bring greater liquidity to the Bitcoin market. This would make it easier for traders to buy and sell Bitcoin in large quantities, potentially increasing market efficiency. Legitimacy for Bitcoin as an asset class. The approval of an ETF would signal a greater level of legitimacy for Bitcoin as an asset class. This could drive mainstream adoption of cryptocurrencies and encourage more investors to consider Bitcoin as part of a diversified portfolio. Cons. Let's talk about the cons next. The possibility of market manipulation is one of the main issues with the Bitcoin ETF. The market for cryptocurrency is mainly unregulated, which gives people or organizations with sizable holdings the ability to influence it. Detecting and stopping market manipulation is also made more challenging by the Bitcoin industry's lack of transparency. An additional point of concern revolves around custody and security. Given Bitcoin's digital nature, it remains susceptible to hacking and theft. Historical instances reveal compromises of exchanges and wallets, presenting a notable threat to both ETF providers and investors. This heightened risk stems from the substantial quantity of Bitcoin that would be under their control. Last but not least, a big worry for prospective ETF investors is the market's volatility surrounding Bitcoin. The price of Bitcoin is subject to extreme fluctuations, frequently without a discernible reason. This could discourage institutional investors from entering the market and present a danger to investors seeking stability in their holdings. Likelihood of approval. Now, in the cryptocurrency space, there has long been discussion on whether or not to approve a Bitcoin ETF. However, current market patterns and events suggest that things could not turn out as expected. The largest asset manager in the world, BlackRock, has submitted an ETF application to the Securities and Exchange Commission. With BlackRock's debut in the cryptocurrency space, institutional involvement in Bitcoin investment may now be possible. Next, one should not minimize the importance or possible consequences of BlackRock's impact. A significant positive response from investors might be sparked by BlackRock's application, which could lead to an astonishing $25 trillion increase in the value of cryptocurrencies like Bitcoin, Ethereum, XRP, and others. Another reason the SEC might approve a Bitcoin ETF is the current state of the market, where businesses are accumulating Bitcoin for their investment portfolios or treasuries. However, the SEC's past behavior and potential concerns cannot be ignored. The SEC has been rejecting Bitcoin ETFs for years, citing concerns about market manipulation, custody issues, and the overall maturity of the market. The volatility of the Bitcoin market is also seen as a risk factor. Still, the trend appears to be moving in the direction of acceptance. More businesses may apply to become exchange-traded funds or ETFs as a result of the recent court decision overturning the SEC's denial of the Grayscale Bitcoin Trust's conversion to an ETF. Furthermore, the SEC's position might shift in response to BlackRock's proposal and the growing demand for a Bitcoin ETF. Impact on the crypto market. Now, with all this, the approval of BlackRock's Bitcoin ETF can have a significant impact on the crypto market. First off, it might spur an increase in Bitcoin values and market expansion in general. The greater accessibility and safety of Bitcoin investing for institutional investors is expected to boost demand and maybe drive up prices. It may also draw more attention to and widespread acceptance of Bitcoin as an asset class, strengthening its standing in the financial sector. However, market bubbles and exaggerated values could be dangerous. The sudden influx of institutional money into the cryptocurrency space has the potential to inflate the value of digital assets, leading to potentially dangerous bubbles in the market. This is a worry that regulators like the SEC will probably consider before approving any Bitcoin ETFs. It is important to note that ETFs are not a guaranteed solution to the issues of market volatility and manipulation. While they can bring increased market liquidity, they can also exacerbate market downturns and expose investors to new risks. As the crypto market continues to evolve, it's critical for regulators to take a balanced approach to ETF approval and to consider the potential risks and benefits for all involved parties. Overall, BlackRock's Bitcoin ETF can be a game changer for the crypto industry, but it's important to proceed with caution and consider the long-term impact on the market. As the Bitcoin market continues to evolve and mature, ETFs will likely play an increasingly important role in facilitating investment in this asset class. While there are certainly concerns around market manipulation, custody, and volatility, these concerns can be mitigated through careful regulation and risk management strategies. The approval of BlackRock's Bitcoin ETF might have a big impact on the cryptocurrency market as a whole. On the one hand, it would serve as a strong endorsement of Bitcoin as a sound investment vehicle and would encourage a surge of fresh capital in the market. Nonetheless, there's a chance that the ETF's exuberance will result in inflated prices and the development of a risky market bubble. At the end of the day, it is difficult to predict with certainty whether BlackRock's Bitcoin ETF will be approved by the SEC or what the eventual impact of such an approval would be. However, it is clear that there is a growing demand for Bitcoin investment products and that ETFs are likely to play an increasingly important role in this space. As always, investors should approach this market with caution and skepticism, but also with a willingness to embrace new opportunities and potential sources of growth. How about you? What are your thoughts on this topic? Comment down below. We love to read them. Well then, that's everything. Thank you for watching. If you like this video, please don't forget to give a thumbs up, comment, and hit that notification bell so you don't miss out on our following videos.